Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we look at the technical charts and try to understand what happened in the market during the day and plan for a better trade for the next day. That's February 29th, Thursday, tomorrow, 2024. So if you're not subscribed, please subscribe and share to friends and colleagues. That it helps us reach out to all. Thank you. So here we have a market wrap up here. You will like to click a screenshot of if your audio is having some issues. But before that, we would first look at the plain charts to begin with. So here we hold the Nifty charts as seen there, and look at this candle. It's a bearish engulfing candle. So look at the sharp fall. It did trap the bulls by actually moving a little bit above the previous candle's high, and then trending fall, sharp fall. It almost took the support of the 20 exponential moving average, but didn't sustain to close above that. Banknifty, even more sharper fall, right? Complete bullish engulfing. It was not a bull trap, but it breached the 20 and the 50 exponential moving averages, both of them. So it's a 624 points. That's more than 1%, 1.34% actually on the Banknifty, and it's like 1.1%. That's 247 points lost on the Nifty today. So that is a sharp fall. Looks like it's heading towards another correction, right? So this is where the price is placed in the channel, is well within the trendline channel. The only thing is it had made an all-time high this couple of days back at near to 22,300, but had a gap down following that and then tried to come out. It did succeed to do that with a bullish engulfing yesterday, but could not sustain that, followed the sell-off, and once again seems to be within that box rectangle pattern. A breach of that has still not happened, so we'll have to see for tomorrow as to what happens. Similarly, if you look at the bank, if you can see that it's on the edge of falling down from the blue channel. It's on the edge. Anytime could fall back to the earlier channel, into which it had fallen down 3 or 4 times. Right, forming the W pattern. So tomorrow we'll come to know if it is falling down. If the price moves below the today's candle's low, then it would mean that it's once again falling back to retest the swing lows near the 44,400 probably, right? So that's where it is placed. Let's look at the support resistance levels quickly. So obviously on the Nifty to begin with, the first resistance would come in at the 22,050 points below that right now. So that will be the first hurdle to take out, and tomorrow is an expiry, so there will be a lot of bull bear fight that's going to happen on this 22,000 if at all the market is not further falling down. Now after that, the 22,300 would be the all-time high, and that could be the next resistance, and after that 22,400 up to 500 channel top you can go. Downside, the support would come in at the 50 exponential moving average. That's somewhere at 21,600. And if that's breached, there could be support of the Fibonacci. It's coming at 21,500 nearby, 21,481, and then for the down it could find support at 21,150 nearby, which is the previous swing lows, and very close by have the 21,000 rounding number and the 2950 gap. That's also a confluence of the 100 exponential moving average, which is coming at 21,000. So 21,000 is going to be the biggest support downside if at all it plans to correct once again. And if it sustains there, maintaining the 22 would be tomorrow's big task. Banknifty, if you look at the hurdles on the upside, the resistance would be the Fibonacci level first. First would be the regaining the 46, because it closed below 46,000 today. So once the 46,000 is cleared, the previous swing highs at 46,800 would have a hurdle. Today also it had fallen down after going and touching very close to the 46,800. So that's going to be a big hurdle. And if that is cleared, then you come to the Fibonacci retracement of 23. It's at 47,100. Before that, 47,000 is a rounding number that's having a good resistance. Then 47,400 is the previous swing high it had made, right? So if a swing low is made here, everything is fine, the price action makes okay. But if it goes back to retest the previous swing lows, then we have trouble. The pattern gets negated, right? So downside supports first would be to come in and find the support at 45,800, which has got a 100 exponential moving average, and if that is breached, there's a Fibonacci 60 support that's coming at 45,400, and that is breached, then you have the 200 exponential moving average at 40,400 4850. Before that you have the 45,000 support aspect. So these are the support resistance. The bank. Let's go back and see the wrap up. So we had a bearish engulfing wide range candle that is formed, clearly bearish, 247 points, lost 1.5%, and it is closed negative below the 22,000. Banknifty also formed a much more wider bearish wide range engulfing candle and closed negative with 1.34%. Of course, that's 625 points squat. Remember, we had 8.5 day correction, and Banknifty was struggling to climb up above that. But Nifty had not corrected much so far. Max retracement that has happened is only 4.5% after 32% of rally that happened. Intraday 5-minute candles, if you see the price action is mostly trending downfall on both of the dies. This is trending sharp downfall that has happened today. The FI data for today has not come in, but yesterday, today it has come actually. It is today's data has come in. It's 1,878 points of sell-off in the cash market that has happened today. So the FIs are mostly sellers, and what is mentioned is 40k. It's not 40k. It's double of that has happened in the last 1 month. And domestic institutions were buyers that managed to help the situation to have from becoming even more worse. So someone equal amount, 1,800 crores of cash market buying that has happened from the domestic retail mutual fund money else. So that's the situation. So for institutions are selling off big time, since that's the only reason that market cannot sustain to further move up, despite the fact that it's still very close to the all-time highs. So resistance support levels are already discussed. I'm not repeating that. So the moment if you see it's a sideways on the Nifty and it's a sideways fallen. So Nifty has fallen with the sideways momentum with respect to the RSI, and Banknifty has already fallen and sideways and falling further. The thing is that the trend has turned bearish on the Nifty yesterday, and Banknifty also turned bearish on the short-term daily chart. So the weak bearish trend and a weak sideways momentum is what we are seeing. That's falling sideways momentum. So momentum and the trend is lost in the short term we're talking about. So this has been claiming one day and giving up everything next day. That's what has been happening for the last. So high volatility, as soon as it has climbed about the 15, it has been going up and down, and that's what is happening. So India VIX has spiked 4% here. It's at 16.20. The closer it gets to the 20, the higher the chance that markets can be hugely volatile and then very difficult to derivative players and option players especially. So stay out of the market if you're not an expert or a professional, right? Or position size or cut short and manage your positions accordingly. So Bollinger Bands are indicating that it's contraction, and it's a bearish biased contraction, and it indicates that potential down moves, potential sideways moves are expected. As of now, expansion downside has not happened. The Banknifty also showing contraction with a bearish bias, which shows that the potential down sideways movements ahead is what it can be anticipated from the Bollinger Bands technical study. So technically, the chart wise, if you see the momentum, the trend for the previous gain has all lost and it's negated. The W pattern, price pattern that we are talking about, the volatility divergence W pattern that is shown on the daily on both, that has got negated because it has fallen below the neckline. Now the 20 and the 50 exhibition moving average is lost for the Banknifty again, but the price action higher, the lower low, lower high, that pattern had negated and it still it holds good. So now if it is not going and retesting the 200 exhibition moving average, then price action by still it's okay. If it makes a lower low at this point, higher low at this point, then further moves up and makes makes a move above the previous highs, then it should be okay in Banknifty. But if that does not happen, we have trouble. The CIB bounce is what we are talking about the last couple of days, and it happened for 2 days, did not sustain, and it failed. The CIB bounce, change of priority bounce, but the previous resistance would act as a support, and then it bounced up heavily. It did bounce, but it sustained. If you look at the sectoral indices, it was a red day, except for the INFI and the TCS. The two IT stocks did okay, but otherwise it was red all across the major industrial 6 or 7 sectors. If you see now, out of the pharma, in reality they are short of, they're still in the bottom bullishness. I doubt that I'll see that. We'll go into the sectoral indices later, but yeah. So basically, auto and pharma and reality may be majoring the short-term bullishness just on the edge of that, but otherwise mostly most of the sectors are closed red today, and it's all fallen into sideways momentum. Now the heavyweight stocks that are closed red today, except the INFI and the TCS, bullish momentum is not maintained by any of the heavyweight critic stocks. The lands, they had fallen 2%. That's the main reason why the market had which set back with the ICICI Bank and Reliance. Both of them have fallen to sideways from the bull zones in the short term. TCS also is maintaining the sideways momentum. So the thing is, the Kotak Bank, the HDFC Bank, and the ITC, HDFC and ITC, all of them have gone to the bearish zones. That's the reason market is showing this kind of performance. Now, using indices are flattish and red. It's at the very top. It rallied considerably, and there could be some kind of retracement that could come ahead. So you have to be cautious because it's some other markets. Dollar is showing some red, about 4.1. Slight rupee up is there, but it's still maintaining at the all-time weak levels of 82.8 USD INR we're talking about. Now crude oil is spiking up 78.7. Is there any connection with the Reliance falling? I'm not sure. There is some struggle related to the crude oil that's happening in the Middle East, so that could be the reason. But 78.7 means it's heading towards the top of the channel. You will be cautious. The gold is also spiking up. It has not been green. It was consolidating at the top, and now it shows some green as well. So though is the money changing the hands from one asset to the other, you have to keep a close watch on. So market crashes come in, the gold prices also increase, and then it had recently made an all-time high, and then it was consolidating at the top. Make a note of that. Gold is hedging instrument. So every time such dips comes in, it is potential opportunity for the investors to invest in quality stocks for the long term. The SIP move, but the trade is direction is what is important. The direction is not clear, right? Neither it is directionally upside moving, and neither is directionally downside moving. It's somewhat in the sideways as of now. If you consider the multiple time frames on both the indices, we have to apply the strategy accordingly. Although the implied volatility versus the realized volatility, the spread difference is not in favor of the different sellers as of now. So tomorrow is the monthly February expiring, so it will be highly volatile because it's a monthly. Royal levels as of now is 21,500 and 22,200. That's 700 points. That's a very wide range just few hours before the expiry, and it's a bearish bias. 0.53 is the put call ratio that you're seeing. Banknifty is having 44,000 and 47,000 put call ratio, bearish 0.59. So overall bearishness and a very wide range of 3,000 points in the Banknifty is what you're seeing, with the futures of short build up also that is getting built out. So you have to be extremely careful. The range is very wide. More corrections could come in because whenever there is a bearish engulfing of this size comes in, it could follow with bearish patterns, but it may not necessarily happen tomorrow. Tomorrow there could be a chance that there is some consolidation that will happen before it further falls down. So there also is a possibility, because after sharp falls of 600 700 points in Banknifty, it is likely that it takes some rest, it takes a pause before it falls. But bearish engulfing is a very bearish pattern, and it is supposed to fall further down. There is every probability of that, so be cautious. And extra volatility on tomorrow is something you have to keep considering. So that's all I have for today. If you have not subscribed and share watching this, please share it to your friends and colleagues. Watch, reach out to max. Happy trading, happy learning, happy investing. Bye bye.